I think one of the easier ways to convince somebody that even though they're watching on a screen the value of their portfolio decline, again, is to in some way expand their perspective. You could talk to somebody and they could say the stock market's scary. And whenever I hear somebody say that, it makes me want to go to a computer and pull up a picture of the stock market for the last 50 years. It doesn't look scary at all because it goes like this. It goes from lower left to upper right, because in a capitalistic system, which is again where we want to draw them back, the only thing that a company cares about, the only thing is making money. That's it. They don't care about anything else. They could have a view on something or a public stance on something, but at the end of the day, they care about making money, and that's it. And that can sound harsh, but it's also a pretty pure way to think about things. And so if everyone's incentives are aligned, when there are these episodes of chaos, it's a war, it's the price of oil's high, it's inflation's high, whatever it is. When those things come about, everyone in the equation, if I'm an investor investing in a great company, everybody wants the same thing. And all the people who are decision makers at the company, who are dealing with whatever the stimulus is that's impacting my business, they care about one thing, that's making money. And so that's why that picture, if we go back and look at a picture of the stock market, that's exactly why it looks that way. And so I think if we can read, it's always about timing. Have I invested money that I need in 6 months? Well, that's on me. If me personally, I invest money that I know I need in 6 months, that probably wasn't a smart thing. It could work out, but if it doesn't work out because of something outside of my control, then I just didn't plan well. And so I think professionally, what we always ask a lot of questions around is, if you say, I have money, I want to invest it, can you help me? The first question is always going to be, when do you need the money back? Unfortunately, in today's advanced system, we see the price that changes all day, every day. But for example, if you had a big company that's been around for decades and decades and they make billions of dollars, their stock price could fall 10% in a day if something happened. But did the real value of that business actually fall 10% in a day? Like if you actually said, what's really different today than it was yesterday? That's often not what's happening. So if I can make myself more immune to that, I just don't want to ever be I don't want to ever be a forced seller. If I can avoid being a forced seller, that would be the number one thing I would tell people. Avoid being a forced seller. Don't ever sell something we don't want to, is a huge key to success.